All right, good morning, everybody, and welcome to the latest Urban Living webinar. Today, we are touching on a very hot topic, the single family rental subsector of build to rent. My name is George Sell. I'm editor of Urban Living News, and we are a multimedia platform for the living and hospitality sectors. So we have got a bigger than usual, fantastic expert panel today. I'm going to ask them all to introduce themselves quickly, and we'll go from left to right as we see them on the screen. So first of all, Richard, good morning to you.
Good morning. Can you hear me fine?
Yes, I can. That's
great. Yeah, I'm Richard Berridge. I'm the CEO of the UK Single Family Association. We exclusively deal with single family rentals in the UK, and we engage with all stakeholders who are involved in delivering that asset.
Thank you, Richard. Graham, welcome to you.
Hi there, everyone. Yes, I'm Graham Sibley, Operations and Marketing Director at the UK Apartment Association, UKAA, which is very much the representative body for the whole institutionally backed rental market, purpose-built, professionally managed, very much representing that's the wider sector, of which, of course, single family is a very important and growing part.
Thank you, Graham. Sandra, good morning to you. I think you're on mute, Sandra.
Oh, after all this time, I can still make that error. Okay, I'm Sandra Jones. I'm Managing Director of Dataloft. We produce data-driven evidence to support decisions in the housing market, sales and rental. And I think the key for today's discussion is that we hold a very large data set of achieved rents and renter demographics. And we ingest about 60% of all new lettings every month. So that's where all our data comes from. And we're part of, sorry, one more thing, we're part of Price Hubble, which is a technology company that does a similar thing across 10 countries in Europe.
Great, thank you. Niamh, good morning to you.
Good morning, everyone. I'm Niamh Waldron, I'm ESG Director with Sigma Capital, and we are the name behind Simple Life Homes. We have homes across the country, single family homes, essentially. And so hence I'm here. Nice to meet you all.
Thank you, Niamh. And last but not least, Paul, good morning to you.
Hi guys, I'm Paul Borrmann. I'm the Managing Director of Ascend Properties, and we are the UK's largest single family housing operator.
Great stuff. Thank you all. Okay, so before we get stuck into the conversation, I'll just quickly run you through how it's going to work. We're going to have roughly 45 minutes of Q&A with our panelists. We'd like to make it as interactive as possible, so if you do have any questions, please submit them using either the chat or the Q&A functions in Zoom. If you submit a question that's on the exact topic we're covering there and then, we might try and do it then. Otherwise, we'll save some time for the end of the session. Everyone who's registered will receive an email with a link to a recording in the next couple of days. And when we get to the very end of the session, there's going to be quite a lot of information posted in the chat. So we'll just leave it open for a couple of minutes so you can take some notes from that when we get to the end of the hour. If you want to carry on the conversation with our panelists after the session, then you can see all their LinkedIn profiles in the chat. So please do make contact with them there. So when we planned this webinar series, you know, it was clear that we needed to do something on single family rentals because it was becoming more and more important to both the build to rent sector and to the house builders. And in the last few months, really, things have really picked up momentum. And these are a few stories just to give the conversation some context. These are some stories that we've run on our Urban Living News website in the last few months. The one on the left was last week, and we'll talk more about that, but a quite eye-catching number about the amount of investment into single family rentals last year. And if we go on to the next slide, just some examples of some of the players, existing and new players, getting into the space. So we've got quite a bit of institutional investment coming in, and some also some bespoke rental housing as opposed to house builder stock purchased by build to rent investors. So there's quite a lot going on and lots to get our teeth into today. So I want to kick off by asking Sandra, how big is the market at the moment? How many units are operational? How many are in the pipeline? And how does that compare as a proportion of the sort of the wider private rented market?
Not on mute. Yep, there are 10,000 single family rental homes fully built and operational. These are numbers, by the way, that come from British Property Federation most recently, and another 18,000 in the pipeline, so somewhere between planning and completion. So 28,000. And to put that in context, there are 5 million private rental sector homes. About 45% of those are houses rather than flats. And in any normal year, there's about 1 million new lettings in the rental market, in the private rental sector, of which about 420,000 are houses. So 10,000 built, 420,000 single family homes across the private rental sector changing hands every year. So in other words, it's a tiny fraction of the whole private rental market.
Mm. Do you think that with private landlords leaving the market in increasing numbers, that is a big opportunity for this space to grow? I mean, do you have any numbers about the kind of the ratio of landlords exiting the market?
I mean, there is a trend of landlords exiting the market, but when you think of the difference in scale, I think there's a huge opportunity for this sector, whether landlords are exiting or not, because you know, if you look at that, you've got 10,000 operational homes, maybe 3,000 or 4,000 of those might change hands every year. 420,000 homes changing hands in the wider private rental sector, so 1%. So even if no landlords were exiting, there is an enormous opportunity for this sector to bring something more desirable to the, you know, more secure, higher quality, all the things that the sector, you know, prides itself on, to be able to offer those alternatives to people living in the private rental sector. The opportunity is enormous. And actually, on top of that, in the latest Savills report that's come out, they reckon another 1 million households will be living in the private rental sector by 2031. So it's enormous opportunity.
Yeah, it's a very timely discussion, this one. When you put that against the backdrop of the required 300,000 homes a year, which are needed but not being built, it makes the numbers even more stark. Paul, I want to come to you. Obviously, the product and the development and delivery process for single family homes is very different from multifamily. But what are the sort of lease up and stabilization timelines for single family rental? What do they look like compared with multifamily?
Yeah, so I guess it's kind of fresh in my mind. Obviously, previously I was at Dandara Living, where we kind of went from 0 to kind of 3,500 units under management. So I guess the difference between PCing, say, Chapel Wharf in Manchester, which was 995 apartments, which was not PC'd on a Monday, and then all 995 was with us on the Tuesday, from kind of void management, from kind of lease up perspective. Single family housing is obviously kind of a little bit kind of different on the scale of delivery. So what we've seen as a business is housing developments, regardless really of the size, are normally kind of working with batched releases of somewhere between kind of 5 and 10 per month. So in terms of us as an operator kind of doing the kind of lease up, it's not to say it's easier, because there's logistical challenges that you don't have in multifamily, but they do come kind of slower than in multifamily at scale. So that just allows us to kind of be really organised for the way in kind of in the lease up. We then have kind of the waiting lists that kind of set off our whole journey really, and you can normally get things kind of pre-approved and kind of pre-leased before they actually come available, and stay on top of the inquiries. And it's normally the biggest challenge is to kind of keep on top of the inquiries, because there's too many for the amount of stock that's coming through. So it's a prolonged lease up, I would say. We went through 1,000 units there in Manchester at a previous company in about 28 months. It might take 28 months to do a scheme of 200, 300, just because kind of the way that it's released in single family. And I guess a bigger difference is in multifamily, once you've got a certain quantum or certain scale, you can put kind of the people on site. Whereas here at Ascend, we have kind of 7,000 of the 10,000 single family under management, 103 developments kind of nationally, from half a dozen properties to 100, 200 kind of properties. So it's the logistical game really, because you're not based on site all the time like with multifamily. And I guess just to give it a bit of a flavour, we onboarded 20, on average, 20 new homes per week in the last 12 months.
Paul, did you notice a correlation between demand for single family rental units and restricted mortgage availability as interest rates went up? Were you seeing more inquiries for this sort of product?
I've seen it both sides. I think kind of build to rent as an asset class is kind of the demand has definitely swung because we had the availability, whether it be single family, whether it be kind of multifamily. So whether it be that people have just said, oh, actually their kind of dream to own a home might not be there anymore because it's just getting even more kind of unobtainable, or people, and this was probably more the case, saying, well, it's 12 months in rental because we don't know what the future looks like. We don't want to tie into an 8-9% kind of mortgage, and we think maybe in a year, 2 years, effectively it might have changed. And then there's kind of the whole market there where if they're in a rental, they can really enjoy the ease of kind of living in a rental, the mobility and all the things that have been discussed many a time previously. Perhaps they choose to stay as a renter. So yeah, I think kind of it's definitely been good for the single family housing kind of market in terms of accessibility to buy stock. I think we'll come to that later, but also from the supply and demand kind of metrics, it's definitely the challenge is working through the inquiries and actually kind of whether it be multifamily or single family, really focusing on the staff training on how to let people down actually, which is a thing that I, kind of from my agency days I never thought I'd kind of be doing if I'm honest. But yeah, kind of putting people on waiting lists but being realistic with them so they're not kind of holding on and waiting for something that perhaps may never come. So yeah, that's been a weird kind of training session to go through in terms of what we say when we don't have stock, because normally kind of you'd have stock and you'd be able to answer the phone and help people.
Sandra, do you have any data about who is the typical, in inverted commas, customer for single family rental, and is it broader than perhaps we might imagine? You're on mute, Sandra.
Right, I might stay off mute just to avoid. Look, I'm going to start by quoting the data that was in the report published recently by Savills, because that was supported very widely by the whole sector. They categorised renters in single family housing. So this is from the sample of single family rental. They categorised them into young families, so families that have sort of infant or primary school age children, and that accounted for 41%, which might be the demographic that you probably find you'd most expect. But then they had 20% of young couples and singles. They had 19% of what they called established families, so families with older children, sort of secondary school age children. 12% what they call mid-aged couples and singles, and 8% over 60s. So I think we would expect it, the world would expect this to be for families, but actually that's 60% families and 40% that weren't families. And actually to take that broader, that mirrors very closely the structure of the demographic that live in the wider private rental sector, single family housing. It mirrors it really closely.
Okay. Paul, did you want to pick up on that?
Just we ran some data and obviously in preparation for this actually. So kind of when we think about the average customer, I know again multifamily we'll talk about 25 to 35. I think we've kind of looked at our data. Obviously, the youngest leasing age is 18, but we have tenants up to the age of 89 currently renting, kind of in the management book. Average of 35 in kind of who we currently rent to. 40% of the homes have children in the kind of demise. With an average income of 34,000, although we do have people earning over £500,000 renting kind of housing stock. The affordability is about 35% of kind of salary being spent on rent. And what we found so far, from an average tenancy length, you're looking at about, on our Live Different portfolio, between 2.5 and 3 years, although that is a relatively new portfolio, so you'd expect that to extend. So yeah, different to multifamily. I think kind of you've got a slightly older kind of demographic there. Income maybe kind of relatively similar, maybe slightly lower. But yeah, 89-year-olds kind of living in rental stock still, I guess, is a good message.
Niamh, bearing those parameters in mind, what are you guys looking for when selecting a potential site for a single family rental development?
I think that's really interesting what Sandra was saying about those opportunities, and what Paul is saying about, obviously, because we can reflect that data as well in our demographic. So for us, the key is always brownfield and regeneration. But the other criteria that are really key when we're looking at a site and developing is transport, employment, education, amenities. So, you know, the developments in our homes are always near a good primary school, access to public transport, access to employment. But I would agree with Paul and Sandra and others saying the demographic is enormous. We don't just have families with small children, you know, we also have, you know, that older generation, everything in between. And I think that's the opportunity that Sandra was talking about earlier. The opportunity in the sector is enormous. You know, you can and should be careful that you make sure you're offering to everyone, and don't try and just think single family. I think the family bit can be a little bit confusing because not everybody in the homes has a family as such. I think it's a home and it's a community, and I think there's that bigger piece when we talk about that single family. I think it's a house with a front door, and it's that security. It's going back to, I think, what Paul was saying about people being in their homes. It's that security. They know the management. If there's something goes wrong, they pick up the phone, and they know it's going to be fixed. So I think understanding that demographic and making sure we cater for everything in between is really important.
Excellent. Graham, the screen grab that I showed earlier from the Savills investment survey, it said that last year 42% of all investment into UK build went into single family, up from 8% the previous year. Is that sort of level going to be the norm now, or was that a blip because house builders were struggling to sell inventory, so they were selling on, you know, chunks of it to build to rent investors?
Yeah, I think there's a combination of factors going on, actually, George. What we saw in 2023 was actually a reduction in the levels of investment in multifamily, one of the lowest years recorded, due to a combination of factors: high interest rates, the impact of regulatory change with building safety, second staircases, etc., reducing the flow of multifamily investment. That said, that I think is a relatively short-term issue, and certainly investors are coming through with being more optimistic now, and the levels of planned investment will start to ramp up again, and deals will start to flow through again. We're certainly seeing in many of the regional cities more interest in multifamily, with deals in Birmingham in particular, Manchester, Leeds. So those sectors are looking to grow again. But alongside that, you have definitely seen a real uptick in the amount of interest and investment in single family. And I take a point of what Niamh said about the term single family and the broader scope to which it applies. Effectively, it's purpose-built rental homes at a very high standard, houses at a very high standard. So with that, the attraction's definitely coming in, with more investors coming in. Certainly, there's more house builders' interest in delivering. We'll talk about that, I'm sure, later. But the expansion of single family is definitely driven by the chronic lack of rental supply. There's investors want the draw of attracted by the draw of stable long-term incomes, hedging against inflation. There is robust rental growth, and of course a slowing sales market. And I think we have to reflect that the withdrawal of Help to Buy, for example, has impacted sales figures and volumes for volume house builders in particular, who have now been seeking alternative routes to sell on their properties. So there's a combination of things moving there. I think there are still some issues that hold single family back: access to stock at scale, the threat potentially of rent controls. That's reality in Scotland, and the threat of it elsewhere. Cost of debt still high, And we have ongoing build cost inflation as a challenge as well. But overall, I would anticipate a continued growth in single family.
Thanks, Graham. Paul, did you want to?
I think from the operational side as well, you have when you look at multi, and I don't think it's about kind of more single family, less multifamily perhaps. I think it's just that the single family is kind of really creating kind of the niche and kind of capturing imagination with the investors. I mean, from from a pure demand perspective and rental, we've touched on that. Our January figures, just to give a flavour of kind of the single family housing market and the movements, we're 8% above original ERVs. So when we look at and model the sites, we're achieving 8% above, but we've achieved 15% above to date from where it was underwritten. And then on relets, whether it be renewals or kind of relettings, January saw a 16% increase or a 22% increase kind of to date. So the fundamentals are really strong, as well as the ability to diversify the risk as well. So multifamily is great because you can get kind of really good kind of quantums. Single family is different, and kind of there's the scaling perhaps kind of that's a little bit trickier. But you can have kind of 1,000, 2,000, 3,000 properties across the UK, and not every single market can do really well or really badly. So you're not as exposed to, say, the Birmingham property market with 2,000, 3,000 multifamily units in the city centre as well. So I think there's a risk mitigation play also.
Yeah, thanks, Paul. Richard, Paul has outlined some of the potential attractions of single family rentals to investors, but can you sort of elaborate a bit more on investor sentiment towards the sector currently? What are the main pros and cons for investors?
Well, the main con, I think, is probably Graham has pointed out, is scalability, and I think it's one of the factors that the institutions have got to get their heads around, because it isn't a problem that which they suffered in the United States, where they quite quickly realised that having hoovered up quite a lot of the mortgage defaults, which came after the GFC, that they were actually going to have to scale because they weren't building them purposely at that time. They were going to have to scale one by one. So they figured out how to do that. And I think over here, we've got to figure out that because of the density levels that houses are sort of delivered in, you're not going to buy 500 houses at a time on one site. And in fact, it's not sensible to do so. So really, they've got to decide what's the ideal density level there going to be for people. And if you look at certain current investors at the moment, you could probably say that, and Niamh might be able to correct me on this, but Sigma's average scheme size used to be around 65. I think it's gone up a bit recently, but it used to be about 65, I think. Similarly with Pace First and with many other people. So when you're looking at schemes bigger than that, some of the institutions are thinking to themselves, well, it's really not worth me getting out of bed if I'm not going to be spending upwards of £30 million because the same amount of effort goes into it. But I think that we're looking at people like Picture Living and also Hearthstone, who have demonstrated that actually you can buy smaller units, so you can build up big portfolios. And I think Hearthstone, for instance, sits something along the lines of number 4 in the Savills list of investors. So you can certainly do that. Outside of that scalability issue, there are just a massive amount of pros. The houses are easier to build, they're less risky to build, they're more sustainably built, they're easier to build than to be energy efficient. The community, which is something of an overused word in this particular sector, in the general built to rent sector, is a genuine community and becomes truly impactful around the neighbourhood. So from a risk point of view, from an investor, the renter also stays longer. So, when you're looking at sort of single family in the round, you're not looking at tremendous development risk. You're not looking at renter risk, and you're looking at something which is, an income which is pretty much finding nearly 99% occupancy rate, probably slightly higher in some, and some of those schemes that were sold last year, some of those were being sold at above 99% occupancy rate. So the risk is less. The only slightly small, I think, if there's a small negative to having that level of occupancy and a reduced level of churn, and that is from the investors' point of view at least, is the inability to reappraise those rents as vacancy happens, because as we know with multifamily, there is a relatively high level of churn, and in a dynamic market where rents are rising rapidly, that gives the investors the opportunity to increase rents a little bit more. But from our point of view as a single family housing sort of association, we're a bit more focused on the value that we give to communities. So we like to see that most people are kind of are on sort of middle income rents, which I think is something that's single family can really help with in a market where rents are really rising rapidly.
Richard, does that stability that you mentioned and the high occupancy rates, does that mean that investors are likely to have a longer hold period for single family rental properties compared with other asset classes and perhaps compared with multifamily?
Well, it depends on the investor, to be honest with you, because as we all know, there are investors out there with different sort of investor metrics, and they do things for different reasons. I think for the longer term investors, they're likely to hold it for a very long time. And we all remember the Prudential from years ago. Well, maybe we don't all remember, but years ago, the Prudential used to hold houses, and they held them basically indefinitely. And it was only sort of the changes to some of the housing laws at the time that led them to leave the sector, and now they're back again in a way. Yeah, I mean the stability of the sector is a fascinating one, and it's one that is mirrored by the stability of the renters themselves, who tend to stay a long time. And if it's a young family, and we're talking about young families, say 41% of the stock, well, if you're looking for a school, you do not want to be moving around schools, for instance, and you start to make friends locally, and that really impacts on that sort of churn level. And I wouldn't say necessarily you're down to sort of ground rent levels of security in terms of that sort of investment, but you're starting getting really close, and ultimately that's going to impact on the yields as the reduced risk is perceived by investors. But what we are going to see is the investors who will be spending more time aggregating portfolios, so there'll be smaller investors, and they'll be aggregating those portfolios in order to sell them on to longer term investors. But having said that, the whole of the sector is very much focused on very high quality management and stock. So, from the renter's point of view, it's a bit of a win-win for them.
Thanks, Richard. One last question on investment. Niamh, obviously, ESG is high on the agenda for institutional investors, and it's increasingly influencing their decisions. How do investors' ideal scenarios concerning ESG stack up with the reality of developing, renting, planning, and the single family rental sector? And what sort of state are we at in terms of progress?
Everybody's interested in ESG. According to various levels, the E and the S particularly important. I think the S is growing more important for a lot of people. A bit like everything else, investors will have requirements that they want according to their reporting, but equally according to their metrics. And data is important. So I think making sure that we can gather that data. I think it is a challenge for the single family rental in terms of gathering that data, operational data in particular, and you've got to tie in that GDPR. So there will be a cost, and I think we do have to accept that. There'll be a cost to trying to ensure we can gather that data and it's meaningful data, and therefore can feed back into the investors what it is that they're actually looking for. In terms of the social element, I think Richard is right, and he hits the nail on the head. When you've got homes within a community and you set up within a community where you want a school and you want employment and you settle down as a family, I think the S is becoming increasingly important.
Yeah, okay, thanks, Niamh. Let's talk a bit about house builders and their role to play in this market. Paul, are house builders and investors and operators, are they all singing for the same hymn sheet? How well aligned are they at the moment?
I think it's a little bit like multifamily a number of years ago, where perhaps you'd build 600-700 kind of apartments and you'd sell them off one by one. And then slowly 2008 happened, and that kind of wasn't there as an option. So that was towards the birth of kind of build to rent and institutional sale. I think, although not as big, the interest rates has kind of forced effectively house builders to look at different exit strategies, just as the same time as whether it be PBSA, moving into multifamily. There's the rental demand that's coming through for high quality homes. So I think kind of as that kind of grows, they'll see that as part of an exit strategy. We've seen kind of the major house builders now look at obviously open for sale, the 106 kind of section 106 requirements for affordable, and a proportion of some of their sites going to kind of build to rent or institutional sales. So I think kind of their exit strategy and mitigating risk will stay. As to kind of, is it going to remain kind of the percentage it is today in the future? Only time will tell. But there's more people coming into the sector to buy the institutional kind of elements of plots, which may kind of increase kind of prices, which may in turn kind of lead to that being more lucrative for house builders to have as part of their strategy. And I think that the next bit is taking it one step further in terms of the actual product. So yes, they're building the product they've always built. That was much the same in multifamily housing. Now, build for sale kind of apartments looked a certain way. Build to rent multifamily apartments then very much going to change with being amenitized, kind of the layouts, the specs, all the operational knowledge that then feeds back into affect the build, whether it be for marketing purposes to be more attractive to renters, or whether it be more attractive to an operator in terms of lowering gross to net, repairs and maintenance requirements and what have you. So I think they are becoming more aligned, and I think as long as it kind of stays part of an exit strategy, they'll kind of just move along that kind of pipeline, really, with operations and investors kind of feeding back in, with the ultimate aim of creating a better product to rent or sell, and also effectively kind of lowering the operational kind of impact of, even down to the scale and the massing of the developments, but also the spec of the amenities, the spec of the kind of worktops and things for the life cycle analysis as well.
Yeah, thanks, Paul. We've had a really interesting question coming from Joe Kirby from Arts Living Limited. Joe's asking if there are any opportunities for SME house builders to get involved in the single family market, and what barriers to entry might be. Graham, do you want to kick us off on that one? That's quite a pertinent topic.
Absolutely. I mean, it's a really interesting thing, because I think everyone's talking here and in the broader market about big deals that are happening from volume house builders selling on, for example. But I've had a lot of experience working with smaller builders, certainly on a regional basis, where they have been very successful in going into partnership with some of the with single family investors and operators. For example, Wise Living have done a lot with smaller builders such as Keon Homes, Kellen Homes, who are much more regional local builders, and there's a preference for that. And there's because it's about local economy as much as anything else. So I think there is scope for that. Barriers, potentially. As with any working with contractors or builders, it's around confidence over solvency moving forward. It depends how the deal is put together. A lot of deals are being put together as forward funded, so that helps. Obviously, is very attractive from a cash flow perspective, and gives the builder certainty, sees your overheads, etc., and means you can retain higher levels of overhead. That retains expertise and knowledge across the team, and ensures delivery of better quality homes. We've run quite a few workshops and roundtables with house builders, and bringing them together with investors and operators in this field. And we've ran the first one about a year ago, and it was really clear that there's a distance between understanding of what what a house builder was looking for, as opposed to what the investor was looking for. And over a series of round tables, we've brought this all together, so that people can understand what the key issues that they're looking for are. So investors, for example, may think that they're looking to get the best deal, the lowest price, but they've got to understand what the margins are that the house builder requires. Likewise, the builder needs to understand what the investor and operator requires in terms of operability, maintenance, as was mentioned before, the building of community and amenity. So that is, I'm seeing some more working towards that. We're definitely seeing more in terms of partnership working, which is very, very encouraging. And we may want to touch on that later, but I'll leave it there for now.
Thank you, Graham. Richard, did you want to just come in on that point?
Yeah, I wanted to come in that because actually it might be sort of a query, sort of how can we be involved? The answer to that question is you're absolutely crucial to this sector working well, because what we're looking at in terms of single family rental is we're looking at delivering homes right across the country, not just in sort of certain hotspots, but absolutely everywhere. So everywhere you can deliver houses, you can deliver single family rental stuff. And Graham's kind of touched on some of the operational elements and some of the aspects in terms of solvency and those sort of things. And those things still stand. But I also have to bear in mind, alongside SME builders coming into this sector, and I think it's absolutely crucial that they do, and they look at this and they look at it seriously. We're also looking at smaller investors that are coming into the sector as well, because we're not just talking about 500 units in Birmingham that they're going to cost 160 million pounds to deliver. We're talking smaller sites with smaller investors who are going to be able to be involved in this sector. And that's what's exciting about single family rental, is that actually we can touch every part of the UK and help deliver high quality homes everywhere. And this is not something that multifamily can do. It just isn't able to do so. So just to slightly touch back on, what are those numbers going to look like in the future? Well, fundamentally, we're not going to be seeing huge deals of 500 units being done in one go, but we are going to be seeing a huge number of deals of much smaller units with a vastly increased number of delivery agents, with local authorities involved and RPs involved and the SMEs involved and smaller investors involved, as well as the big institutional investors. So this is a really important point that sort of Joe sort of raised, and it touches on the whole delivery aspect of single family rental.
Richard, is there a worry that if we get an unexpectedly positive economic picture over the next year or so and interest rates start coming down faster than expected, is that likely to make house builders less likely to want to divest so much inventory for single family rentals? And is that going to slow down the growth of the sector? Or do you think it's now an established part of the house builder model to put some inventory aside for rentals?
Well, it's the established part of some house builders. And at the moment, of course, they're not really incentivized to change their business model. And that's a slightly opposite question in a way, is that do you simply respond to what are you going to do by that's not our business model? I think what a lot of people fail to see in terms of what we expect from our house builders and what we expect from our investors is being pushed internationally from what investors are expected to sign up to in terms of being able to deliver. And I think Niamh will recognize this in terms of a lot of the money that is coming into investment, and that's investment of all kinds, they are signing up to regulations now where they have to prove, unequivocally prove, that they are investing in ESG compliance schemes. Now, that could be a housing, or that could be something else. What that's going to mean is that investors in the single family housing sector or multifamily housing sector are going to have to ask people who are delivering those homes, that could be house builders or anybody else, that they fit that criteria. That criteria fits with their lending or partnership criteria. If it doesn't, it's not that they don't want to invest with the last house builder or an SME. It's just that they can't, because the investment criteria doesn't allow them to do so. And that's becoming more prevalent as we go through the next few years. And as regulation becomes more stringent, we are going to see investors with, basically handcuffed to an ESG agenda. And I don't mean that negatively in any sense, because I think it's coming and I think it's a good thing, for the globe. But it does mean that everybody is going to have to change their business models in one way or another to do it. And in terms of an ESG perspective, that means that house builders have got to think a lot more about the societal impact of what they do. And that means that they're going to have to think about rental product, a social rental product, and a for sales product. And I think that the smart house builders and the smart SMEs of all types are going to think to themselves, right, let's get ourselves ready for this, and make sure that we have these delivery streams in place. So just going back to your question about a for sales model, yes, of course, for sales, everybody, 90% of this country aspire to own, and I don't think that's going to change anytime soon. But in the meantime, the rental sector doesn't shrink to any marginal or to any measurable degree or significantly measurable degree. So we still need high quality rental homes. And that's not going to change. And we can do that through our sector.
Thank you, Richard. Graham, if we go to the other end of the spectrum from the SMEs to the big volume house builders, I mean, we saw yesterday the announcement that Barratt is acquiring Redrow to make an enormous company, and quite a few of the house builders now are owned by big institutional investment firms. What's to stop some of these very well capitalized house builders starting up their own rentals division and retaining this stock themselves and putting it out into the market rather than selling it? And is that likely to happen?
It's an interesting thought. If I can reflect back on a bit of historic history, we did see a number of house builders and contractors look at the affordable housing world and setting up their own, retaining their homes within and creating a registered provider of affordable houses. And that generally didn't go well. Why didn't they go well? It overstretched them in terms of operations and their experience. I think what's more likely, and we're seeing a shift towards this, is that the larger builders and good-sized regional builders moving to a partnership model that works alongside operators. So we get into more of a JV situation, and I think that's going to be a scale of that's how things will scale more effectively. I think there are a lot of risks and burdens for them to take that on themselves. I'm encouraged to see a number of house builders with their partnership divisions or our operations and bringing in people who've got investment and experience as well. So that will enable much better understanding of the needs for and partnership requirements for the sector.
Yeah, a less adversarial situation than it might have been in the past. Yeah, it's a good thing. We've got quite a few questions coming in. I want to move on to talk about the actual physical product. We have a question here from Naveen Patha. What type of amenities are being offered in single family rental projects, and how are they different to what we offer in build to rent? Sandra, can I come to you on that one? Because I know you've got some data on what renters are looking for. Maybe you can tell us what they're after and how that stacks up against what's actually being provided in the physical product.
Yeah, no, so I'm sure obviously the other operational people on this call will be able to talk about what amenities they are offering, but we do an annual survey and we get sort of 30,000 responses from people, homeowners and home renters and so on, of which 5,000 are renters in the wider private rental sector. And the response we got from them, so first of all, what they look for in their neighbourhood, and what absolutely bangs home here is the overwhelming majority, and we give them a long list of possibilities to choose from, and the one that comes out by far and away above everything else is feeling safe. So I think it's a really interesting one for the providers. It's not about, you know, having high-end amenities. It's about having a place you can feel safe. So the overwhelming majority put as their number one, what they look for when they're choosing a neighbourhood is feel safe. And then following that, we get access to schools and nurseries, which I think really surprising that you know, that order of priority. And then beyond that, amenities, and that means within walking space. It doesn't necessarily mean on site, but yes, being within, you know, within a 15-minute walk of cafes, restaurants, and local amenities. And then after that, it's time to commute to work. But I think that feeling safe is a really interesting one for the sector to focus on. And then we also, just before I leave it, we also looked at what they want in an actual in the property itself. And again, surprisingly, even though we give them this long list of options to talk about, you know, quality of finishes and you know, sizes and so on, the one that comes out top there is neighbours, pleasant neighbours, and then it's broadband speed and a parking space. So those are those top priorities there. But I think the feeling safe one is a really interesting one.
Yeah, thank you, Sandra. Niamh, did you want to come in on that point?
Yeah, I think that comes right back to that sense of community. And just talking about those amenities, and the partnerships that Graham was talking about, we very much are partnering with our building partners to provide houses that are to the spec that we want them to, which is, you know, energy efficient, good quality homes that people can live in comfortably and safely, tying in with all of those things. I think, but with the focus on affordability, you know, we do have to remember that, you know, people are working hard, they need to pay their rents, they have other bills, they've got other commitments. And I think ensuring that we have a broad range of homes that people can select from. There's a lot of people who want to rent their homes who are, you know, both working members of the household. They've got to find the nursery, find the schools. And so those extra amenities are not something that actually we need to provide. If you correctly locate your homes, then all of those amenities are within that wider walking distance community feel. And then it's up to you to ensure that you develop that sense of community as part and parcel of it, where you've got the people who've bought their houses, the people who are social housing, and the people who are renting their homes, and making sure that you're a presence in it. And I think that's potentially some of the risk where you've got a smaller number of single family rentals within a community. But then you've got to get the balance right where you don't have too many. And I think, as Richard was saying, there's the scope for everything.
Thank you, Niamh. Niamh, while you're there, can you just tell us a little bit about what goes into your homes in terms of specification to address the E of ESG? Is it pretty much broadly in line with what the volume house builders are doing? I mean, just tell us.
Yes, so we will sit down with our contractual partners, our building partners, and we will have our home, which is a very specific set specification, and that's reviewed every quarter to make sure that we're keeping in line with, one, what people need, and also what is required for regulation, but also keeping in mind all of those things going forward about efficiency. I use the term net zero very loosely, and that's for another time. But obviously, keeping in mind the planet, our homes, the benefit for us is that our homes are all relatively new. So 87% of them are EPC B and A. So you're already above what the government is requiring. And then making sure that the facilities within, so going back to Sandra's point about that safety, you know, we have all of our single family homes will all have a garden, access to being outside. We also ensure that there's a wellbeing provision within the app that we have, and we have all of those things added in. So the E and the S are equally important, I think, and increasingly investors and others, regulatory bodies are also asking, what are you doing on the S? And more than a tick box exercise, what are you actually doing, and what's visible, and what's can people see and feel when they live in one of our homes?
Thank you, Niamh. Paul, are there any significant differences between house builder stock, which has been acquired and converted to a rental product, and bespoke rental homes, which have been kind of done from the drawboard specifically for rentals? Are there any noticeable difference, or are they more or less the same product?
Yeah, I guess it depends on kind of how they're acquired. So there is a market there for the house builder half yearly sales. So they get to their close to kind of their half year kind of profit announcements, and maybe they've got £20 million to kind of they need to make to swell the coffers and kind of present kind of certain figures. So there's very little you can do actually in that kind of 2 month where somebody agrees a sale, and we were talking about maybe a Hearthstone model or something earlier, Richard, where kind of, yeah, there's 20 there, there's a good price, it makes sense to do the deal. So that's the stock that's been built and kind of you're buying it. I think it's moving more towards the strategic way, as we've mentioned there. We want to get it right for the single family kind of renter and make sure they're kind of sticking their boxes. So really, the ones that you do have the lead in time for, they differ mainly because of operational input, and it will be, as we've already touched on, spec and design. So working with, let's say, the national house builders to deliver a base spec, coming from the operational feedback, which would help the lease up. So from a marketing and attractive point of view, the resident satisfaction whilst they live there, and also can obviously from the investment point of view, the rental growth. whilst also engineering out operational costs. So things like kitchen spec, are you looking at Corian or granite worktops, or actually is it more of a laminate product that's easy to replace, but you still get 15 years warranty? Shower screens, and the way that you, even the small things, the kind of the silicone under the shower, which always leaks over, turning the side of the bath, creates a swell on the bath panel. Things like that, that not that they're not thinking about it. And we've touched on ESG, kind of moving towards perhaps air source heat pumps, smart locks. So that's the stuff that when you've got time, you can get into. Obviously, I've spent a large number of my kind of years career in multifamily, and I guess that element of the sector kind of started with, oh, well, there's an amenity space there, we'll deliver it, and as an operator or an owner, you can fit it out. And where that ended, well, where that's kind of progressed to now is conversations with local council refuge collection departments, where if you get the site plan right, and if you get the kind of refuge loading bay within 10 meters of a ground rather than the floor bin store, the council will come and collect your bins kind of, and you don't need to do anything. If you don't have that, it's half a day a week, kind of your technicians on site staff pulling out bins. So multifamily wasn't there and got there. I think the really interesting piece is how we can, as operators and investors, kind of even get further along kind of the track, because architects used to draw something and then say, what did you think? We then got to the point where we had standard spec in the architect's hands, and they knew kind of effectively how multifamily ticked. And then you get the product that an operator and an investor wants. But ultimately, it's kind of the product that the resident wants from the surveys and from the data that we've already discussed. And then I think the other side of it is that we work with the SMEs to effectively advise, maybe. They've got kind of really good product that they're perhaps used to selling in the for sale market. How can we make and advise them on their product to become interesting or attractive to investors, whether it be institutional investors, or, as Richard said, smaller scale investors for the single family housing sector. So we do a fair bit of work with kind of, like I say, the SME house builders to say, your product's fantastic, and if you tweak these 2 or 3 things, you then open yourself up for different exit routes as well. And then I guess our relationship with, say, the disposal type teams, so kind of your capital market teams at your Savills, Unite Franks, and kind of all those kind of teams that effectively help get your product into the market, we can kind of be the conduit for that as well. So yeah, I think kind of it's getting into, whether it be SMEs or national house builders, early doors, and effectively them being open to talking to us rather than wanting to plow on the way that they've always done it, I guess, is the key.
Yeah. Thank you, Paul. Richard, just one quick one for you before we get on to audience questions. You mentioned earlier that community can be an overused word in build, but multifamily does a lot to try and encourage community in terms of programming events and this kind of stuff. Is that necessary in single family rentals as well, or is that kind of community building more organic and easy to engender because you've got families with kids the same age going to the same schools and so on?
Well, nothing's easy, but so that's always a question that you have to ask yourself: do you have to put less effort into it? The answer to that, of course, you don't know. You have to put a lot of effort into all these things to make people integrate into local neighbourhoods. But the interesting thing about houses are that they tend to be built within or close by an existing neighbourhood, and that existing neighbourhood has a host of facilities that people can buy into or not. They can go to church or they're not, or they can go to the pub, or the local shops and the school and the clubs, and it's there's a plethora of stuff that they can get involved in. And I think what probably the smarter operators do, and I'm sure this is certainly the case with Sigma and Place First, is that they look very closely at what that local neighbourhood looks like and how they can integrate their renters within it. Plus, do a few other things, and I know that they do things like Easter egg hunts and stuff themselves. And it is genuinely a real community. I do feel, and this is my personal opinion, that that the community of multifamily can be a bit of a simulacrum. So it's a bit of a sort of simulated community in a way, and it has to be, in a sense, curated by the operator to perpetuate. That's not the case in single family housing. It really is integrating and helping people integrate into that local community, helping them make friends. And one of the easier things that helps with that is, of course, that many multifamily schemes, single family schemes, are within existing multi-tenure schemes. So, and that helps an awful lot because multi-tenure schemes offer genuine community. If you have a single tenure scheme, well, to an extent, your ability to be able to offer genuine community is compromised. And you, generally speaking, with single family, you have that opportunity to help people integrate into a place, into a home, into a neighbourhood, you know, that they can fully contribute to in the ways that they, you know, will want to in a much broader sense.
Thank you, Richard. Graham, I want to come to you next. We've got a question here from Shiv Srirangan, and he's asking about rent controls. Obviously, we have an imminent change of government in the UK. We've already got rent controls in Scotland. What are your thoughts on that, and whether it may impact the entrance of new investors to the space?
Yeah, very pertinent. I'll keep it as brief as I can. The question actually refers to experience in Scotland and Germany and Holland. And what we've seen, certainly in Scotland and in those others, is the imposition of rent controls has had an adverse effect on the investment in build to rent. No doubt about that. We're working very closely with the Scottish Housing Minister to bring about some change in that, and there is some potential movement, because there's no doubt that the viability of developments is affected by rent controls. Equally, we are seeing, well, the good news in many ways is that Labour Party is not necessarily leaning too strong towards that, but we'll continue to work on that. The key thing is that politicians and at local authority level need to understand what the build to rent really is about, and that's a big part of the work the UKAA is doing to create that education underpinned by a code of practice and principles and customer charter, which you'll see next month. Give that little plug now, which really codify what build to rent is, how it is differentiated from the wider PRS, and in particular the relatively few rogue landlords who the rent controls and other legislation is potentially targeting. So we'll be arguing for not exemptions, but guidance to planners around what, and in the Renters Reform Bill, to recognise the quality, the standards that build to rent operates to.
Thank you, Graham. We're almost out of time, unbelievably. This has gone very quickly. I'd like to finish off by giving you all 30 seconds each and a magic wand. So what is the first thing you're going to do to speed up the growth of the single family rental sector? Niamh, I'll start with you.
Oh, straight in there. What am I going to do? What would I like to see? I'd like to see, and I'm not pointing the finger at planners, but if things were a little bit more consistent, and if there was a little bit more of a sort of not a uniform, because we don't want everything to be the same, but if there were set high standards, stick those standards, and make sure that, you know, if tomorrow all family homes had to have an air source heat pump and various things on the E and panels and whatnot, we would make sure we could find it. You know, at the moment, we don't have to find it. We have to find it by a certain date, but the sooner we can get to a more, you know, it will encourage people to get everything off the ground. The supply chain will be in place. There's my 30 seconds.
Thank you, Niamh. Sandra.
Speed up growth. I think actually my message really clear. It's that point that we're talking about at today, 1% of the whole private rental sector. So it's not different. These are all people who live in private rental, who choose to live in private rental. So when you're talking to policymakers, we're not catering for a different market. We're not catering for a different demographic. We're catering for the same demographic who live in rental, who are having problems because there isn't enough rental stock, and which is a growing sector. So just that understanding that this is about supplying homes to people who, for whatever reason, choose to rent, and they're not different people, they're the same people, and so therefore, if you want to help those people have homes, you need to be supporting this sector to grow. So I think it's just that understanding that it's the same demographic that we're providing homes for.
Thank you, Sandra. Paul, how about you?
There's all the government stuff. Totally agree with that. Kind of what you can control, what you can't control. I think one thing I would say is, as Richard mentioned earlier, unlocking the kind of SME kind of network actually. So SMEs understanding that there is different kind of disposal routes to traditional sale, and the more that you see that in the press, I think the more it become perhaps part of their exit strategy as well, which would then bring kind of the breadth of the country to life on the single family element.
Thanks, Paul. Graham, over to you.
Yeah, mine links back to a wider political piece as well. Really understanding by politicians that rental is not a dirty word. Rental is a positive and viable choice for many people, and certainly the route towards delivering the much needed homes we need across the UK. So recognizing that and providing the sorts of incentives or guidance towards planners that will enable single family and build to rent to be built quicker, and a plea: do not reintroduce Help to Buy.
Okay, thank you, Graham. And finally, Richard.
Well, we actually do have a magic wand. Well, that's the greatest thing about it, because we all have the ability to start to reach out to everybody right the way across the country and educate them around what single family rental can actually do for everybody. And that's not just, the renters themselves, but how we can help local authorities, how we can help them sort of dispose of their assets, how we can help them partner with people, and it's not that difficult. It's a message, but we need to get out there and we need to talk to people. So what we're sort of saying is engage with all the stakeholders. Let's look at what we are doing. Let's think about stakeholder value rather than shareholder value. Let's talk about stewardship as opposed to operational management. And let's really start to think about what we're actually doing. Because generally speaking, if we can all get involved in this sector, if we can get behind single family rental, it has a unique ability to kickstart development of all types, housing types, right the way across the country, because it does support the building of houses for sale and the houses for social rent at the same time. We need to get that message across. That's what we're going to be doing. And if you really want to hear what we're going to do, come to our launch event on the 22nd of February and look at LinkedIn, and you'll be able to see the link there.
Brilliant. Thank you, Richard. Thank you all. That was a fascinating discussion. I think we got through a fair bit in an hour. I think we've done very well there. I'm just going to show a few slides before we wrap up. So our next Urban Living webinar is on Friday, March the 8th, and we will be looking at the Flex workspace and how it is emerging from WeWork's shadow. You can see the link to register for that in the chat. If you'd like to work with us here at Urban Living News or any of our other brands, IHM, we do in-person events as well as digital output. Do get in touch with my colleague Henry, whose details are on the screen and also in the chat. If you're on any of the social channels you can see there, do give us a follow and get involved with. We're quite active across all of those channels. And I'd just like to say thank you. Thank you to you all for watching. Thanks to Niamh, to Paul, to Graham, to Richard and Sandra for their great inputs today. Thanks for your questions and making this a good interactive session. Enjoy the rest of your day and have a great weekend, folks. Thanks very much. Bye-bye.
Thanks, George. Take care.
Thanks, everyone. Bye.
Hello, we are International Hospitality Media, or IHM for short. IHM is the #1 brand to engage with decision makers in hospitality and real estate. Our 4 multimedia brands lead their respective sectors with breaking news, comments, trends and opinion across a variety of multimedia solutions. We provide an inspirational community to connect people through world-class events, webinars, podcasts, award schemes and much more. But let us share our story of who we are and what we do. Over 10 years ago, Piers & George had a light bulb moment to provide expert opinion, comments and low-cost digital content. And so they went on a journey over the past decade, creating media platforms to serve the hospitality and real estate industries. We now have an engaged audience with a reach of over 60,000 monthly visitors across our website, 48,000 of our email database across all the sectors, and over 67,000 across our social channels. Everything we do believe in challenging the status quo. We believe in thinking differently. We make things simple and very easy to work with us. And we're a friendly bunch too. We offer creative solutions to help you achieve your business goals. Read, watch, Listen, meet with IHM. Contact us for a chat today. Just look at some of the brands we have worked with recently.